Hello, traders. I'm going to do this live thing so it just be easier for me. Um, I'm going to do my weekly marking of the charts this morning. First thing I do is I put on a 1 minute chart and I do regular trading hours and I find settlement. And I've already got it drawn in here. It's right on top of the yellow line, so it's real easy to see. And I'll just mark it. There we go. From there, I go to a regular trading hour 4 hour chart and I start marking out these levels. You can see up here we have all-time high and we have a candle that went right up to it. So I would just mark those both together. We'll make them blue and we'll just call that so it's going to be too many words if I put in that whole thing. I just put REL, relative equal highs. Okay, so this is the 4 hour. But it's also the daily. Oh, daily went a little higher. And so weekly also would be higher all the way up to here. Okay, let's go back to the 4 hour. Okay, so that gets us on the upside. Now we need to look at the downside. So we have this one, put red, and we'll put 4 hour. And we need to, I'll put RTH. I don't usually do it now just because I know I'm only marking regular trading hour, 4 hour highs, but I'll do it for your benefit. Okay. So it looks to me like when this wick came down, it almost filled this fair value gap. It left a little bit on that fair value gap, but it did take out this 4 hour low. And always look for and mark levels that look like this. These would be relative equal lows on this 4 hour chart. So you want to make sure you mark those out and label them. They're not dead equals. We just put relative equal. There we go. You can go marking all these if you want to. Um, it's no harm in it for sure. Uh, if we start trading down, that's usually when I start worrying about those levels. We'll go ahead and mark some. Usually if it starts running down this far, it'll run through all of these at once. It won't take one and pop back up, but it might. Each one of these would represent an AM or PM low for the afternoon session. Let's see, this would be 9:30, and this would be, so that would be the afternoon low for that September 26th, and this would be the morning low, afternoon low, morning low. We can mark one more. If we start trading down lower than that, I would just midweek start marking out these lower levels. These two are relative equal lows as well. So I would mark those. If we start offering lower, which I've been thinking we're going to every week, but so far we have not. But if we do start offering lower, it's going to be areas like this that the price targets. Okay, so we have a substantial number of those marked. You can see there's some gaps in the price action. It has wicks kind of traded through, but not all the way through. Those would be areas of interest for sure if we start aiming lower. It won't go there in a day. So now we have our daily levels. Where do these things correspond? Well, here's a daily. This is also a daily. Okay, so not only is it a regular trading hour low, but it's also a daily level. And I don't put in low because the red tells me it's a low. This one came all the way down to here. That's close enough. I mean, it's not to the tick, but it's close enough that I would write this one in as a daily level as well. This one definitely is a daily to the tick. Oh man, I did the wrong thing there. Let me delete that. I was just wanting to mark it as a daily. Okay. And this last one here also is a daily. And it's also making this regular trading hour and this one a daily. They're kind of equal. So that's where you see them piled together like that. That's an important level. We start offering lower, I would see us going to that level. I've seen it go down and just take the regular trading hour and leave the daily and then go back the other way. So the ones that are regular trading hour have the most power because that's when the most volume is conducted during that New York session. Now, here is interesting. We have a daily. We move it down. I probably am a little off on my line. A daily relative equal low, 4 hour. That's a pretty important level. You want to make sure that you make that one identifiable, that it's not just another random level because of the relative equal lows. So I might add a little bit of weight to it, like that. Now this daily low, I'm not concerned with because it's not a regular trading hour low. But if we push down through here, we will most likely take that. There's no fair value gaps or anything. If you notice, there's a volume imbalance right here on the daily chart. That's an opening gap for a daily chart. And when we did start offering down on this day, that's exactly where it stopped. That was Fed rate decision day. Crazy day. But it was good. A good place to keep in mind. Do we have any of those here? We do. On the daily chart, we have volume imbalances here and here when we went to the upside. Those would be good to mark out on your chart as well. So what makes it a volume imbalance? Well, the wicks are going all the way through this business, but the candle bodies are not overlapping like they are here. That makes it a volume imbalance. So you could mark that out as well. They would also be considered opening gaps. And what I typically do with those is I just mark them out as in gray. as a potential level. Mhm. I just make it a 1 point. Volume imbalance daily. It's abbreviated. That's okay. And then I just clone it and put it in these positions. There's one there. And one more. When you see volume imbalances clustered, especially like daily gaps clustered, because this would be one here too, where we closed here and opened here. That would be a cluster of um, new day opening gaps. And on the weekly, I think there is an end wall right around here, new week opening gap. Let's try a look at that. We closed here, open here. That was our new week opening, no gap. But here's our new week opening gap right here. So this one and this one. So we closed here, opened here, and this would be an end wall. You don't have to put all these levels on your chart, but you can see how they're clustered, and that's usually a magnet. And even the opening, even though there wasn't a gap there, yesterday we traded down to it to the tick a couple of times, or not last week, not yesterday. So this one here that I've got marked out where there wasn't a gap there. We opened dead even with where we closed, but the market did offer down to it a couple of times. If we put on like a 15-minute, you'll be able to see here it offered to it, here it offered to it. Left this low, that making those relative equal lows. Big target. So this is also an in log. There's no gap. I don't know what you'd call it. New week opening, no gap, I guess. But that's an important level. So what we have there is clusters of opening gaps. And then we also have this one down here where there's relative equal lows. So that level right there is really important to keep in mind moving into next week. Let's go back to the weekly. And let's look at this lower hanging fruit. Do any of them correspond? Okay, so this one here is a weekly level. Come on now. Huh, it won't let me click off of it. Okay, let's try again. There it went. Daily and weekly. That makes it mucho importante, so we'll make it a little bit bigger. And then we have this one down here that's also relative equal lows and a daily and a weekly. And if I'm not mistaken, it's the monthly low too. One of these is a monthly low. Let's go to monthly and just double check that. 1 month. This one would be the only one that's close to the month. So that one would be pretty close to a daily and a weekly. Let's go back to weekly. You'd have to go all the way down here to get the monthly low. But that one does correspond well with regular trading hour lows. I had it marked last week. I'm not going to mark it this week, but if we start offering down there lower, you'll see it. So here, this one would be worth putting on there that it's also weekly, monthly. Even though it's not dead equal with the 4 hour regular trading hour, if we come down, we will take that wick. So maybe I should just mark it differently. Like do this, and then maybe clone one of these. I'll clone this one since it's, we'll put it right on top of everything else. And I'll move it up to here. Come on, why you not wanting to move on me this morning? There it goes. And then we'll just make sure to mark that's daily, weekly, monthly. All right, there we go. So we got some nice levels if we start offering lower places we can aim for. If it's looking pretty clear that the market wants to move down, these are some of the areas we can aim for on the downside. Regular trading hour lows hold a lot of weight. If you're a billionaire, I should mark the all-time high. If you're a billionaire, you don't, and you want this thing to go up, you don't want to be buying up here. You want to be buying down in here. So that's what will drive the price down is people putting their orders in there down low. And they have stops and stuff. I mean, there's people that trade these charts, weekly charts, people with a lot of money that can handle lots of movement against them. So let's go back to 4 hours here. And that's what we look like on a 4 hour. This gap got filled. Looks like most of the gaps have been filled in. Nothing to mark there. So that's pretty much it. I would just start the week with an open mind. I'm not going to put on blinders, but I'm gonna be looking at those levels there. Now you can do the same thing on ES if you're trading ES. I did do some trading with ES last week because its signals to me were better. They were cleaner. Where NQ might go and consolidate at the top, ES would put up a better reversal signal. So this is ES. I already had some levels marked on here. Let's just do some rearranging here of these lines I've already got drawn, so I don't have to type them all back in. The pre-market we don't need right now. Settlement. When I mark settlement, I'll show you. I put it on the yellow line right there. It should be the same because that's settlement, 315. But when I go to a 1 minute chart, it's always just a little bit off. Not too far off this time, but it's a little bit off. So I changed to a 1 minute chart to mark my settlement all the time. So I get it in a precise location. There we go. All right. Now we can go back to our 4 hour, make sure we're on regular trading hours. We are. And just do the same thing that you did with NQ. Now you notice on NQ, these were relative equal highs. The all-time high and it went just almost all the way up to it and left that high. Don't know why. I think something with the government shutdown. We're A week after rollover. I think rollover the first week kind of normal price movement. Last week was abnormal price movement. We would go up and we would leave highs and go up and leave lows, or go down and leave lows, and that's real common to see on rollover, like for a couple of weeks after rollover. And it was like they waited until the 1st of October and then started putting their orders in because the market movement was really, really erratic this week. Okay, so we have a couple of 4 hours there. This would be similar to that equal lows on NASDAQ. So, and they're interesting. Oh no, let's just clone one. Huh, pasted it way up there. Okay, so you can mark each one of these individually. I think it's important to mark this one because it could take it and then let's see, it's a morning low, so that would be the afternoon low for that day. Mark that because it could take it and then go back up. But then we have these. See how this one is lower than that one? Liquidity is definitely going to be resting here. So those are important levels if you're going to be trading ES. Why do I keep doing that? Delete. Let's clone this bad boy. I don't think it would take this one and not that one. I think if it comes down this far, it's going to take them both. And I'm going to label those relative equal. Relative equal, RELEQ. Okay, so this one is no longer a gap. We traded through it. So we can relabel it. Hmm. This one doesn't have any candle bodies trading through it. I think it could possibly be revisited. This one is lower than that one. This is definitely a level that needs to be marked out. There we go. And we'll do one more. This guy right there. All right. Now, let's see how it corresponds with daily and weekly and monthly levels. Okay, we know the daily, weekly is going to be definitely the same up here. We just put it at all-time high, and that'll serve that purpose. So on a daily chart, that is that high. This one is a daily low. Important. Not too far from settlement. Okay. And this one is also a daily low. How is that possible? Yeah. Okay. ES doesn't move near as much as NQ does. It won't travel as far in a day. And so the only one that's close to being a daily low is this one. You could just put an extra line there. Yeah, that's fine. And just mark it as a daily. Now we did have a similar situation, I think. I just marked out over there in NQ. I'm kind of losing track. Maybe this is where it was just a little bit off of the regular trading hour. And I said it could take the regular trading hour and then go on back up. That's possible. And there's another one here. So we'll clone this guy. In two situations, we had a regular trading hour leave the daily low here and here. Those are important levels. Why wouldn't we take that daily low? So those are important to look at. I'm gonna I'm gonna give them a little more weight just because of that. And this one here. That way I know they're a little bit more important. But all of these levels will be important levels. Most of the time when we take a 4-hour high or low, like we took this one, we pushed a little higher, but then we pulled back. Most of the time when we take one, like here, we took it and then we went back up. That's what you usually see happen. This whole week's been just bullish, bullish, bullish. Um, and then we had a little pullback. But typically that's what happens when we take a level, then it goes back up. And usually it's a 4-hour level. Like over here, took this one, went back up. And I'm sure there's a 4-hour here that we took and then went back up. I think that's when we filled that gap. Okay, anything else that catches our eye down below? Of course, we have these levels. I told you last week, these will be revisited at some point. I don't think it'll be this week. That's way too much price movement. But the analyst's prediction for ES by the end of the year is 6,400. So it may take till December 19th when this thing expires, but this level right here will be revisited. I don't know that it's necessary to mark it on the chart right now because we're so far away, but by the end of the year, this is just too clean of a straight line. It's too close to analyst predictions. That's where we go by the end of the year. Will we make it in a week or month? I don't know. We'll just have to see. Let's look at our weekly. Okay, so which ones correspond? This one. We can also mark it as a weekly. We already got it weighted. I'm pretty sure that's the monthly low too. I don't know if I can change it with that thing on there, but I'll do it. Oh, I still got it pulled up. Yeah, it is. And then we'll do monthly too. All right, back to weekly. These are just daily levels. This one right here. Why didn't I have that marked on the daily chart? Let's go back. Okay, yeah. These are both daily levels, and this one is a weekly level. Interesting. So let's go back to that weekly. And daily, just to double check I did it right. Yep. Okay, so this one's got to have some beef. That's a big level right there. And of course, we have this making these relatively equal. Let's look at the weekly there. So yeah, these are both regular trading hour, daily, and weekly levels. I could see us getting down there pretty quickly. So yeah, that's an important level, and it corresponds well with a fair value gap that's been left open right here. So that's an important level to keep in mind right there. See that? And this is on the weekly chart. A fair value gap on the weekly chart, big. That is very big. The market moves to liquidity and imbalances, and this is a buy side imbalance. So we will definitely offer back into this at some point. Um, Marking it, I mean, you could do a fib tool on there and just lock it in place and label it. I can't label it like that. I can label it like this. Um, Weekly FEG, fair value gap. Okay, there we go. Let's go back to the daily. You can see that down there. If we do start offering lower, I think it may take a couple of weeks to get down here, but this area will definitely be targeted at some point. Um, go to a 4 hour. Let's go back to the daily. Any inefficiencies, fair value gaps? Don't see any. Are there any gaps? In dogs and in wogs. We have one here. That is a volume imbalance. Right there. We'll make it gray. We'll call it an in dog. Oh, we'll call it a volume imbalance. Okay. And clone it. Morning. We'll clone that thing. And then we'll look for any more and we'll do those too. ICT says these things are magnets. This is actually a new day opening gap here, but it was to the downside, so it didn't leave a volume imbalance. This one was a little gap there. Okay, so that's the only one. That would be the cluster of new day opening gaps that you would see in NQ. Let's look at the weekly and see if we have a gap there. Okay, so here we closed. Here, we opened there. That's the one that's almost dead even. But here, we closed here and opened there. So that would be an N wall. That's an important level to, you don't have to leave the lines on your chart, but you need to have the level in your head. Hey, there's an N wall right around this level. That's a new week opening gap. And even if there is no gap, it's still an important level because the market will oftentimes revisit when we open. So like we opened right here this week. I'm going to mark it and see how many times. I know NASDAQ revisited a couple of times and left relative equal lows there. But I'm just going to mark that one as new week opening, no gap. In Wong? Yeah, it's an in Wong. All right, good. And so I'm going to go to a smaller time frame here, like a 15-minute, and see yeah, if there was a similar type of price action. Remember, in the 15-minute in NQ, we touched down to this thing a couple of times, and then adios pay out. And here we danced around it quite a bit. That's what created these relative equal lows on the 4 hour. I can see on this one I got that line just a little bit off, so I'll move it. But we definitely worked into that in Wong, the no gap. So those are important levels to keep in mind on the way down. So the in Wong is at 6698. And ICT also says anytime you see a cluster of these, it will be a magnet for price. Will it go up another? I mean, we already hit 6,800. That seems to me like a psych level. As soon as it hit it, we started pulling back. So, will we continue to go down? I would like to see us take out this right here, fail to go any higher, and then start offering into these. But I've been wanting to see that for 3 weeks now, and it just hasn't been happening. It just keeps on going up and up and up. So you can have an idea. You can go into the market saying, "Oh man, we're going down today," but ultimately you have to keep an open mind and just read the price action because we may take these lows right here. Got that line off just by a little too. These look like a real nice place. We may take those and go to a brand new all-time high. You just never know. So you have to keep an open mind. One problem I had this week, and I've been having it for the last couple, 3 weeks. I'll get in a combine and I'll try to get it funded as quickly as possible because that's what we want to do. We want to get in there and get that XFA and get our payout. And you try to get that combine funded as quickly as possible. If something happens, doesn't go your way, and you end up blowing it up, no big deal. Just buy another combine. That's kind of been my mentality. And really, the only difference between a combine and an XFA is 150 bucks. So, um, if you have the mentality, I'm going to get this combine funded so I can finally start making some money in this XFA. Whatever you, what this is for me, but I've also heard it from other people. Whatever I've been doing to get that combine funded in 2 days, I'll carry it into the XFA and blow it up. I may do good for 3, 4, 5 days, but because I'm doing that higher leverage, trying to get more money quickly, one mistake and you could really, I mean, just one day you could just destroy your XFA. And and that's what I've been doing. I've gotten multiple accounts funded in the last month and be doing good, getting up there. There was one combine that I passed, and I had a bad day the first day, over leveraging, lost $1,500. Over leveraged, over traded, $1,500. So I adjusted my uh, I divided that by half. I actually did 2,500 one day and 2,500 the next day, and the dashboard didn't record it, so I had to do 2,500 again the following day. And I finally got all that one passed. And then I get into my XFA, and I use the same type of leverage. Market conditions aren't right for it that day, and I blow up my XFA in 2 days. So whatever you're doing in your combines to get funded, you may say, "Oh, once I get funded, I'm going to straighten it up. I'm going to calm myself back down, and I'm going to just do micros and just do daily base hits and get my account up to where I can get a payout." You may say that. That's the logic. But emotionally, you're going to be thinking about, man, I made $7,500 to get that last combine funded. I did it in 3 days. I could do that in this XFA, and I could be withdrawing the weekly max of 5 grand. That's what you're going to be saying. And one mistake, XFA blown, gone. So I'm saying this for my benefit as well as yours. I'm still going to be trying to get the XFA funded as quickly as possible, but I'm not going to do it. I'm going to try. I'm not going to do it in a manner that could blow up the account if I'm incorrect. So doing something silly like you're in a trade, you got a full size contract on a mini, and it starts going your way, and so you add another mini. Now $40 a point on NASDAQ. Maybe you add one more, and you got $60 a point, and then it does one of these things for you. Going your way. Everything's going wonderful, and then it like this here, like you're in a short, and you're saying, "Oh man, we're like right here. Oh, we're gonna have to take those lows," and so you add some more, and then it does that, and that's a $2,000 pullback, and boom, your account's blown. If you over leverage, you may get lucky some days, But if you really look at your performance in an over leveraged position over time, you probably had some that have worked out and been wonderful, but over time, the majority of them probably burned you pretty bad. Um, so I'm going to try my best to keep my size small. If I'm going to enter a mini, I'm entering it right at the reversal pattern. Otherwise, whatever position I put on at that reversal pattern is the one I'm leaving on. I'm not going to try to add as we go up the column. Um, I've been burned a lot of times by adding on the way up. I think this one here would have been a good spot to get burned by a pullback. And that was right at the open yesterday. And we went up and up, and then we pulled all the way back to the settlement and then went on up. And that was definitely a burn spot. I think I had two minis on um, up here, and then this pullback got me bad. It was like a $1,200 loss right away. So yeah, that was another lesson learned. If you put on too much size, your risk of ruin is great. If you keep your size small, you won't make as much money on each trade, but you won't blow up your account either. So I guess you just have to decide what's most important. Catching that one good trade, making a good money on that one good trade, or consistent profitability. I think that's it for me. I got to go to work. I got to go get some more money to buy more combines and XFAs. But I hope y'all are learning to recognize this stuff. I could show you some. This to me was the only clean reversal of the day yesterday, and it's not even super clean. It's kind of that government shutdown, post rollover type of stuff. But ES definitely had the cleaner signals this week. So this would be an order block, bullish order block. We can move that up. We took out the psych level. We touched it, 6,800. So that's kind of like an alarm sound. Ding, ding, ding. If that would be a bullish order block to the downside. We did have a fair value gap here that we could have played off of. But this is one of those situations if you say, oh man, I'm getting heavy on this leverage. This is going my way. And you enter in with a couple of minis or three minis, and this little pullback right here would be $1,000. No. Okay, let's say you don't read this as a bullish order block because we are chopping, and we say this is our breaker. Where could you get in? We don't have any more fair value gaps until this one, and it is fall out of bed time. So even though, I mean, that one would be the only one I could say you could use this fair value gap, and your stop would have to go above the high. So you would have entered in here, and your stop would have been up here. That's actually not bad. 2.5 points, 5 points with a full size E and S is $250. So you would only be risking here, what, 100, $125? That would have been a great trade because ES left settlement. Whenever it opened, it did not revisit settlement. Only NQ did. See here, settlement was here and it left it. So this would have actually been an excellent trade going back to settlement. Lots of money there. And you can trade a mini with ES without getting your butt handed to you. I would say there would be a great spot to get in, and I would have gotten in there if I wasn't in bed, but I went to bed because I was upset for losing that money early. So that's 30 points back to settlement. $50 a point on a mini. That's not over leveraging. That's like getting 5 micros in NQ. Okay. $30, $50 a point. That's $1,500, right? Yeah, $1,500. Not a bad trade. That's a 1 day max profit day in a combine. So if you're trading NASDAQ and you're struggling with some of the ups and downs like I've been, keep this chart up too. And you might see a better signal over here. Let's look back at NQ and we'll see if we can see that same signal. I don't want that to be clouding up my judgment whenever I pull that back up. Okay, NQ. Okay, so in the morning, the markets were decoupled. The NQ bounced around, settlement was here, took settlement, went up. It left the pre-market high and it left the 4 hour high that was here. This has not been moved. It was still there. Left it. And then it started offering lower while ES was offering higher. This is a run up. ES ended up going all the way up, all time high and above, while NQ was okay. And this is the reversal pattern. This is where ES hit 6,800 right there, same exact time of day. We didn't even take these highs. If you were just watching NQ, would you be like, oh, we're definitely going lower here? With these highs just resting there right above the market, I wouldn't. That's one of the reasons I wouldn't. I mean, I'm not trading this. This doesn't look right. But that would have been your reversal pattern. You would have had to take it, even though these highs had been left by just a couple of ticks. But that's how we get relative equal highs. So let's look at the reversal pattern over here. This would be our lower high, I guess you would say. Highest point, which isn't even the highest point of the day. The highest point of the day is over here. So you would have to use that breaker as our breaker. You couldn't use that one over there. So it would be, there's the high point, and there's the low point. And it looks to be a giant breaker. How many points we got there? Maybe it's not. Maybe I'm just blown up. It's only 17 points, which is still a pretty good size breaker. So, this, we actually went up and then we touched the top of the breaker. Candle bodies respected it. Fair value gaps, none, none, none. We got some here. I have a fair value gap with volume imbalances. That's a nice push down. So where would you enter? When this breaks below that yellow line, you could enter, that orange line, you could enter right there. Boom. Where would you aim? Low of the day, I don't know. Settlement had already been taken. There was a 4 hour low down here we ended up going to. And so that could be an aim point, just low hanging fruit here. See what kind of points you could have gotten there. But this is late in the day. This is already after lunch. If you got started when the market opened, your eyes would definitely be crossing by now and having endured a whole bunch of high resistance chop. That's 84 points to right there. If you traded a mini, that would be $1,680. $1,680 to right there. Again, combine, max profit day. If you're an XFA, that's a nice day. And it happened quickly. That was a nice push down. Boom. Take it out. Done for the day. If you tried to do a continuation, all your money would have been erased right there. So there were some signals. They were just hard to see. And the decoupled markets, it scared me off yesterday. I did take a few trades, did try to get some money back and over leveraged and paid the price. But that's part of it. Still a learning process for everybody. I was watching a little clip. I don't know if y'all know who Rips is, but he does these little shorts. He does a full live stream, but he'll turn this live stream into some shorts. And one of the shorts he put on there, he said that, he goes into the market every day nervous because he knows. He said, I've got $389,000 in my account and I could blow this account up today. He said, so I always go into the market nervous. And we don't have that kind of size at any given time in a XFA. I mean, you could build it up that high, but in a combine, we have $2,000 we're working with. And if you're trading a product that can move 100 points in the blink of an eye and it's $20 a point, you're putting on a mini, your risk of ruin is high. It really is. And $200 stop loss isn't going to do nothing with the mini. You need at least a $500 stop loss. And that gives you the opportunity to be wrong 4 times trading a mini. Kind of have to weigh your odds. Our reversal patterns, when they're clean, which I think ES was much cleaner than this one. This one was fairly clean. It wasn't well, even this push down right here to make a lower high. That push down would rip you a new one on a mini. So let's say here's our breaker. We have a fair value gap, but none above the breaker yet. We don't get one till over here. So I guess that would be our entry like here. That would have been okay. So our entry there, this push down. That's 17 points. You've been okay. You would have been okay. But 17 points. But this isn't even a clean reversal. I like a very clear bottom to be made and a push away, which we did. I mean, it is a reversal pattern, but it's just not as clean as I would like to see. See if we can find a clean one. This is early, but it's relatively clean. Clear bottom hit, took out that low. There was also a 4-hour low there. And then we started offering higher. If you use this as an order block, you could have got in here and continued up the rest of the day. That's a clean reversal. We also could use that as our breaker. That's a clean reversal. This is that in Wong, the no gap that touched to the tick. This is a fairly clean reversal, but we didn't take that high. This is yeah, it's fairly clean. If you buy the first fair value gap, a lot of times you'll get burned on the way back up. A lot of times it will make a lower high first. I like to see that, but sometimes you don't get an opportunity. For this one, our breaker is here. We took that low, lower high, definitely a liquidity run. That's what you would be looking for a downside move. So here we finally pushed through breaker with fair value gaps, went back up to it. That would be an excellent place to get short, right there. And then you would just aim for whatever low-hanging fruit. You could aim for this one or try to get there. But you have to have a place to enter and a place to aim. So this would be a cleaner reversal. It's not 100% clean because we did chop around in this area for a couple of hours before we reversed. I don't even like to see them that dirty. But you can trade them. When was the last time we had a nice clean reversal signal? This was not bad. But we don't revisit the breaker at all. We don't have a high or low. We just, boom, went up. Where would you enter? There's the breaker. There's a fair value gap. I guess you could enter there, live through that chop, aim for something up here. That's just the way the market's been since rollover. This one isn't a bad one, but it's just difficult to get in. You'd have to get in right at the breaker. You run the risk of it making a lower low or a higher low. This one's not terrible, but we do have the higher low situation. Breaker would be here. If you didn't get in right away, it was adios payah. You could try to get in there on that little stutter. But this PD array is nice. I would consider that a clean reversal. We left some highs, we came back down, we made a higher low, and then adios payoff. So that entry right there would be real nice. And just aiming for the highs. But this week, because of the rollover, look at that. Wow. If you got in there, that's a 100-point run. 92 points. Not bad. When you have a reversal pattern and you have an aim point and you can be disciplined and not over leverage, I think you can be unstoppable with that reversal system. All right, that's it for me, folks. Um, get back to our chart levels. There we go. I'll just leave it on that for y'all to take a gander at if you want to screenshot it. Jot those levels down. Those are those are what I believe are the important levels of this week. Of course, if we offer higher, you know where that is. It just grab one and hold on tight. Hope everybody has a good weekend. I love each and every one of you. Trading can be difficult, and it's easy whenever you lose and make a bad decision like over leveraging and blowing up your account to get down on yourself. And I'm definitely guilty of that. So I just want to encourage you to not let trading define your self worth. It's not. That's not the way it's supposed to be. Ultimately, it's a job or a business that we're doing. And if you're trying to pick up a big client and something falls through in sales, you don't run around saying, "Oh my gosh, it's all because of me." In trading, you do because you click the mouse. But in sales, there could be a whole lot of different things uh, affecting that sale. And so it's easy to get down on yourself, get frustrated, say bad things about yourself. But I want to encourage you not to do that. Be kind to yourself and be kind to other people too. Hope everybody has a good weekend. I'll see y'all next week with our daily reversal patterns.